The U.S. economy added 145,000 jobs last month, missing expectations of 160,000. Leading the way were jobs in retail and healthcare and hospitality. You could also see that manufacturing and mining on the screen lost jobs. Actually, manufacturing was down off 12,000, mining losing 8,000. Joining us now is Joel Shulman. He's CEO of EntrepreneurShares. And Joel, when you take a look at those numbers that we got out today, 145,000 jobs were added. Missed those expectations of 160, although it wasn't a huge miss.
Right.
Unemployment at 3.5%. What do you think this tells us about the state of the labor market right now?
Well, there are a couple of things related to this, and we spend actually a lot of time in my company looking at job growth. In particular, we focus on entrepreneurial companies and job growth. And so what we do is we analyze the S&P 500, and because this is our peek into actual data, hard data. And what we can tell you is that last year there was about $3.1 trillion between M&A deals proposed and actually completed, another trillion or so that's coming due in the near future. So we've got about $4 trillion, and a lot of jobs are being lost. And so a lot of the data that people are focusing on is looking at job growth. But when you back out the M&A, we have less than 1% job growth in the S&P 500. But there are entrepreneurial companies that are creating most of the job growth. It's about 11.3% from only 30 companies, in the S&P 500. So it's really a handful of companies in communication services, IT, and consumer discretionary that are driving the market. The rest of it, we're actually losing jobs, through M&A activity.
Joel, is that a trend that you see continuing now for the next couple of months, or at least throughout 2020?
Yeah, no question. There are a lot of, as we looked at last year, in terms of the revealing statistic, was M&A deals that actually fell apart, that were terminated, and there are very few. In fact, over the last 5 years, it was one of the smallest numbers for that period of time. And what that tells us, there are a lot of companies, a lot of M&A bankers trying to push through deals. While interest rates are low, while the market's calm, the market's at all-time highs, and so what they're trying to do is push through these deals, and so we expect to see more of that going on. And so what the data does not show when they talk about job growth is the loss through M&A.
Joel, when you take a look at where the market is today, we had the Dow briefly above 29,000. Right. Seems like we're hitting new record highs almost every day at this point. Yeah. Do you think this upward momentum that we have been seeing is sustainable?
Well, not at the same pace and not with the same companies. So when you look at Apple, that's been up 90%. It's now close to a $1.4 trillion company. I know a few, it's about 1.375. Mm-hmm. And Microsoft is 1.2 trillion, which is up 40 to 50% last year. You can't expect these monster companies to still grow at 40% or 90% per year. But there are more than half the companies in the S&P 500 that did less than 25 to 30% last year in terms of stock price appreciation. And it's those companies that we see, continuing this year. We see a lot of growth potential in U.S. small cap entrepreneurial companies, and we see non-U.S. small caps being the really sweet spot in the global equity markets.
Joel, one thing that caught our attention today in the Wall Street Journal, they had this feature piece about money-losing companies. As it stands right now, they said that 40% of listed companies are in the red. When you take a look at that, is that something that concerns you?
Well, many of those companies are the Ubers, the Lyfts, the Pinterest, and these companies have Workday. It's a $40 billion or $30 to $40 billion company that's been around for 20 years. You've got a lot of these high growth companies that are losing money, and people are betting on growth. And while the top line is going up, the bottom line is still lagging. And so what we do, we have a handful of these entrepreneurial companies. We invest in publicly traded entrepreneurial companies, and some of those companies are in there. But we're shifting more of our portfolio to companies with actual cash flows, and there are still plenty of those companies. And many of the companies are reaching record profits in 2018, 2019. We expect it to continue in 2020. So I think in 2020, you're going to see at some point where people are looking at the market saying it's gone up 30, 40% in the past 12 months or so. They're going to be focusing on cash flows, and there's still plenty of those companies in the U.S. and abroad.
All right, Joe Shulman, thanks so much for joining me.
Thank you.